I was 5 minutes into recording a video on the trade setups that I took last week, and I got distracted by the Uni chart, and I stayed paused for 3 minutes on the Uni chart, just watching and waiting. So I decided instead I would cut that and instead do a video on Uni. And not just Uni, but looking at some of the thought process that I have with something like Uni, because this is very similar to the way that Sushi reacted when we got all of the shit coming out. So this is something that I want to spend a little bit of focus on and think about. Think about what we can do with assets like this, right? So we're down on the 1 minute time frame. We're utilizing the RSI. We're utilizing some support and resistance levels. We're utilizing some chart patterns, and we're taking a look at, really like how can we play an asset that looks like this? How can we play an asset that is this aggressive? That's done a 2x today. That's up. Well, it's done more than a 2x today. We were down at the 340 region at 3 a.m. this morning, and we hit 850. So, like the thing is wild and insanely strong to the upside, and whenever it hits a trend, we're going to see for the first time here how it handles a 1 minute downtrend, because that's where we currently are. And so that's kind of the focus of this, is like, what do we do? What are we looking for? And how do we play an asset like this? Well, and also, questioning the point, is it worth playing an asset like this? Is this something we want to get ourselves involved with? So I'm going to quickly take you through kind of my thought process, what I'm looking at when I'm down on the 1 minute chart scalping something like Uni. So first thing is, a position that I've currently got is short from 805. So we're short from here. I've taken an add to that position, which has brought my average all the way down to 740. So I've taken an add in this region here just to try and pump up a little bit of size, because I want to try and get out of this soon. So I've just tried to pump up the size towards the end of the trade to see if I can catch some extra bit of downside from here. So what are we looking at now? Well, firstly, longs are getting paid, right? Like that's where the real success has come from Uni. And so priority number one is I'm looking for long positions over short positions. Okay, that's priority number one. Whenever I'm scalping an asset that's like this and is up, ridiculous percent per day, then I'm looking for the long side. I'm not looking to get short too often. This was a slightly different setup that I took here. So I'm looking for long setups as a primary. Now, what I'm utilizing is RSI and divergences, along with breakdown points. Okay, so what I'm looking for is strength in sell-offs, strength in buy-ups, and then support and resistance. So when we've got a chart that doesn't have a huge amount of data, like we've got with Uni, then we just have to work with what we've got. So what we know is that where we are currently in this little region here, we have the potential for a little block of demand to be inside here. Okay, a little block of demand to definitely be inside here. So that's one thing we're aware of at a point like this, is that we know that we're sitting on top of what could be a demand region, and absolutely, given the strength of Sushi, this is a demand region that could just in fact hold. What I'm also very cautious of is the RSI. So when we take a look at RSI here, we can see that the RSI is holding at the 50 on the 15 minute, which again is an incredibly attractive situation to be in. When we've got assets that are trending up heavily and we've got a 15-minute chart like this with a 15-minute RSI hold, that's a pretty attractive picture for us. So right now I'm looking to position long. That's what my primary focus is. It's getting out of this short and getting into positioning long. So this demand, I'm aware of its existence, and I'm monitoring now to see what's going to happen to Sushi. Are we going to crush through this level? Are we going to hold this level? But this is certainly a level I would expect slightly more consolidation to be at. Why do I expect more consolidation? Well, because this is a demand level, I expect people to be thinking about positioning here. So I've got two sets of people. I've got people like me that are short from $8, okay, that are looking to get out of position and they want to exit at the best possible price, which is down here. And then we're looking at those potential buyers that are looking at stepping in on Uni, and what they're going to be doing is looking to position in this little region through here from 640 down to 610. Okay, so they're going to be looking at positioning. Sellers are going to be looking at getting out And this is why we may expect a little bit of a longer consolidation at a region like this. If this level fails, then we'd be identifying secondary demand regions, which we've got one just below it down here, which we could factor into a potential support and resistance region through this area here. And then below that, we've got this one all the way down at the bottom. And I think this is the one probably here. And again, I think this aligns with number one, these demand regions, but also a horizontal level through here. I think this zone looks like a clean horizontal level as well, all the way across. So I'm aware of the levels that are below us, and I'm aware of, from a short perspective where I'd be looking at positioning, and from a long perspective where I'd be looking to position. So let's take the 1 minute again and kind of take a look at the current action. So what we've got here is the potential for a triangle. We saw one on this side that I played earlier, and it was like a 25% move or something ridiculous from this triangle here. And we've got another one that's built up on this side. Now this one isn't as clean. You can see by the structure of this other one here, it's not as clean, but we are still getting a reaction from it. So far this is good. I don't really want to see price getting back inside this. If it does that, then I may consider just closing my short there and banking that profit. We know how quickly this is moving. I don't want to get trapped. So I'm just going to be monitoring and watching what the reaction is around this level. Through here, once we got the breakout of this triangle, we did 5 minutes of consolidation on the outside of it. We're entering the same sort of patch of time here, 5 minutes of consolidation here. So I'm looking for hopefully impulsive move to the downside, try and clear out these lows over here, and then see what the reaction's like to this 15-minute demand patch that we're currently sitting in. When I'm looking for positions, looking for divergences. So in this situation, I'm looking for a bullish divergence. If we can form one, then that's great. It gives me more confidence around closing a short and opening a long. And on the flip side of that, I'm looking for bearish divergences when we're rallying, but I'm not too interested in playing them. Reason being is that I should already be long, so the bearish divergences aren't too much of a problem, and the bearish divergences are largely ineffective and weak. So we can see one through this region here, one through here. Okay, and nothing happens. Well, I mean, something does happen. We get a 30-cent sell-off and then rally again. But that's not enough to be able to actively trade from. All right, this here is 4 minutes. And that's a little bit too aggressive from my perspective here. So I'm really looking for some of the bigger plays on this. So we think about it as kind of like 1 minute swing trading, right? Because they're the sort of percentage moves that I'm looking for. But it's happening on this 1 minute time frame versus the daily or the 4 hour. I'm trading this at the moment on FTX. I'm not trading this on... Apologies, baby Shiller, just stirring. I'm not trading this on Binance. Trading it on FTX. And let's see what we get with this. This is still an attractive situation. If we start to get a 1 minute divergence creeping below 630, maybe good enough to get out of this position and even consider the flip. We've got very similar setups, at very similar points in the chart. Consolidation, consolidation, hopeful sell-off, buy up here. So let's chat. Is there value trading something like this? Okay, so there's a huge amount of value. One thing that's important, whenever we get an asset that moves like this, we had Wi-Fi, then we had sushi, and now we've got Uni. And whenever something like this, whenever the perpetual contract hits an exchange, it's crazy volatile, and we're doing huge percentage gains a day. And it's something we've got to be really, really aware of, is that exact fact, right? We're doing huge percentage moves a day. So this isn't something that you can fuck about with, because you're going to get blown out pretty damn quick. If you make a couple of wrong moves in this market, you're going to get blown out really quickly. So what's important is establishing your position size on something like this straight away. So you have to know, what position size should I be using? What's going to protect me? What's going to protect my capital here? So you've got to be aware of that position size. You've got to make sure that you can establish early on what number of contracts am I taking for an average entry. Whenever we're scalping, that always looks slightly different because of the stops that we're taking are quite fluid and they change often. But we have to be aware of roughly what is the position size I can take? What can I absolutely not go above in these conditions that mean I'm going to get absolutely destroyed if there's a strong move counter my position? The other thing that's incredibly important is realize when you're wrong and get out very quickly. Okay, so you have to realize when you're wrong and you have to get out quickly. We'll talk more about that in a second. This is a really nice move. We're seeing that similar action, this time obviously to the downside. I can see my ETH short is slowly creeping up in profit, so I assume that ETH is also undergoing a little bit of pressure here. But this is nice so far from Uni sell-off side. This would be the target from a triangle play out like this. So we'd be looking around the 612 area. We obviously got full target and another 20% on top of this one here. So we'll just be monitoring how we go in this region. Again, we know we're smack bang in that 15-minute zone now. Okay, we're right in the middle of that zone. Now this isn't a particularly pleasing setup from a bullish perspective. Two reasons here. Number one, RSI has lost the 50 level, and so we'd be looking for a full continuation to the downside. The 5-minute here is not diverging and it's still continuing to trend down. So we can see here, small consolidation on the 5-minute. Sell off again. Okay, RSI not yet reaching that oversold level. It rarely does on Uni. One time here yesterday. One time here. And then it bounces. So we can see that this level here at 33, this is a relatively interesting spot as well because we may get that bounce from a region like this. The other thing that we may see an effort to do on Uni here is to protect these lows. So we may see an effort to try and sustain this price to protect the lows. So as you can see from just the discussions we're having, right, I'm in and out of the time frames, 5-minute, 15-minute, 1-minute. I'm very aware of what's going on all of them because I need to combine all of the factors together to understand how far I can push a position. So right now, like we said, 5-minute continuing to the downside, we got levels below us and we're in the middle of a 15-minute demand region. That's not an attractive look, okay, being in the middle of a demand region because we should be touching and bouncing like we did here. Okay, touch, bounce. That's what we should do for a demand zone. We shouldn't get into the middle of a demand zone. We should be touching, bouncing, and continuing rallying. So a bit more consolidation around here. We'll dive back down to the 1-minute now and take a look at the action more closely. We can see that the minute is down here. There's no divergences yet on the minute, but we are in the oversold territory. And even on the 1-minute, it doesn't happen particularly often. You know, last time was today. And as soon as we did that, this bottom point here was basically the start of the rally from $4 to $8. So we've got to be aware of the fact that when it's down in this region, you know, there's definitely the potential for a rally here. But also quite noticeable about this bottom was the divergence. So we get the move up to the 50, so we would consider this an invalidation. But then what we would also note through this region here is the reduction in momentum. This is the sell-off that had the momentum. This further push, there was no real momentum behind it because we failed to push anywhere near the extremes. So that's definitely a noting point for us in here. We got a little bit further to go till target. If we hit the target whilst making a divergence, again, that's probably a good enough position for me to try and exit this trade where I've added size and brought my entry down. What I could do, if I wanted to, is bring this stop. So what have we got at the moment? We've got a 738. That's exactly where it is, actually. It's 738.5. So what I could do is I could bring a stop down to here at 698. Or if I wanted to be even more aggressive in the stop, I could bring it all the way down to here at 664. So if I now wanted to try and get out of position and, you know, I wanted to trail this down in case there was further downside I could take advantage of, then I could look at trailing my stop. And when we think about that process, you know, this high is too far away. We don't want to give back that much profit. This high here is absolutely an acceptable option for us at $7. Because maybe that is going to be a resistance point for us. And this level down here at 666 would be an aggressive one. Okay, it would be an aggressive trailing stop. Because this patch here we're not like necessarily convinced that this patch holds. Okay, so we're not necessarily convinced that this patch holds. And so therefore this would be a relatively aggressive movement at the stop. We know that there has to be a bounce because of the 1 minute and the way it's in that oversold territory. So we have to expect a bounce. And potentially what we could look at is, have we formed another region of supply that's in here? So as we can see, we've got the sell-off, the base, and the sell-off. So we may have formed a small patch of supply in here. We'll see the reaction there. And I'll keep my stop relatively fluid for now. For now, it's above the $7 region. But realistically, I'm going to market close this if shit hits the bed and I need to get out. So we're just going to take a watch and see what happens if we get back up towards the 650 level. See if there's any residual supply left over there. And see if that's an opportunity to try and push the market down further. The one good thing about trading Uni to the downside is, once again, we get some pretty established parameters around how we want to try and trade it. We get some pretty established levels that we're looking at moving in and out of. Chart patterns actually work surprisingly well on assets like this because it's just simple supply and demand metrics that are governing all chart patterns. And something like this where we've got a huge amount of number one, we know there's a huge amount of available supply, and obviously there's a huge sort of fuss created by Uni. So we know that there is supply, and we know that obviously there's a huge amount of demand as well, and so far demand is quite clearly outstripping that supply. So this is the push now from Sushi that we need to be cautious of. It's not an area that we're going to think about closing because it's got to pass through this, certainly to get back towards this 665, and getting above this region. So it has to pass through here. And so for now, we'll just leave it and we'll just, take the assumption this is supply. There are residual sellers left here, and we'll see what the reaction is from this. We would like to ideally see the divergence. That would be the counterplay. That would be the opportunity to get on the long side. I'm just checking the S&P a second. I thought Trump was speaking today. I've had the stream loaded, waiting for it, and now it's disappeared. It says there are no streams. There are no live streams today. Interesting. Okay, so good reaction immediately. All right, so when we speak about those supply and demand regions, like we're looking at for the 15 minute, okay, and like we got in the initial touch, there should be a strong bounce as soon as it hits it. We hit this 1 minute region, there's a strong reaction. Okay, there's a strong rejection straight away as soon as we hit this 1 minute region here. So like this is good. This is what we want to see. That confirms our thought process that there is supply available here. There are sellers who moved into position here. Whatever that looks like, whatever the makeup is, closing longs, whatever. So if we now start getting back above here, that would be an indication that these sellers are now gone, right? Or that there's too much demand. So that would be a warning sign for us. So when we're thinking about stops and actively trailing that down, I've now got some more evidence for why actually 665 may be a good level to get out if we get back above there. I wonder what the panic sell level is. Not that I ever think that Uni's going to hit there. I just theorizing to myself while no one else is here while I record this video. But I wonder what the panic sell level is. I wonder what the level of like, oh shit, I should have sold at 8 and now I've got nothing. Like I should have sold at 8 and now we're at 4. Like I should have sold at 8, we're now at 3. Like where's the level that everybody starts to get nervous? So moving down to this area again, good reaction from it. We saw the strong sell in that flick down of the candle and then the recovery. Indication there's definitely someone interested in buying here at the low. 619. Definitely a good indication that there's probably someone sat down here who's looking at trying to fill up. Again, that's all speculation. It's not anything confirmed via the chart. It's just a commentary for price as it's happening right now. 20 minutes on this? Holy shit. Thought process still remains the same. The average entry is fine. The 665 level is the big one. I don't really want to let that much profit go back to the market, but I'm okay with that in this situation because this is a wild beast. So there will be another opportunity. I don't have to worry too much about foregoing some of the profit here because there'll be another trade for me, I'm sure, pretty rapidly on the back of this. So ETH starting to move a little bit further back up. And we can see, so here's the reaction again down at this 619 level. We'll see if our guy is still down here. Okay, so strong push down, looking for the divergence. Are we going to get a bullish div that forms here? We've certainly now got the target of the play out from this. Passing through the 15-minute demand region through here. Good continued sell pressure. We really don't want to see this diverge because obviously we'd love to continue the short position running longer. 5-minute is still got opportunity to head to the downside, right? So with the downside, we're looking at 566. That's what the downside push looks like. If we get the 1-minute divergence that confirms in here, then we're going to be looking at trying to take a hedge position on this. We really just want to see continued sell pressure, push to the downside, get down towards this 23 level on RSI. We'll take a quick look at the 15-minute. We can see here the pressure building now down towards number one, this high at 585, and then this small pocket of demand that we've got down here. I would suspect that breaking 6 would be another relatively large sell-off point and would enable us to try and hopefully reach the bottom of this. So still trying that push, getting towards 6, getting towards undoing the divergence, but not quite there yet. And like I said, the primary thought process will be to try and take the hedge in an area like this. That's to protect the value here of the position from what we've currently got. And that gives us an outlet in case we are incorrect in the short, right? It gives us an outlet to have a backup plan here to try and trade. So we're going to take the hedge play on this 1-minute div. We're just going to wait for a lock-in. So I'm just going to wait for the next sort of 25 seconds or so. Just wait for a lock-in here of this div, because as we know, right, this can easily undo. So we want this to confirm, and then we're happy to try and take a hedge position here. The liquidity is pretty scuffed on futures contracts. There's like a 10-cent spread. I can get away with a 6-cent spread on December, which I may have to take it on. But we're still not in position, right? We've got our green candle or our blue candle here, but we're not in position yet. There's still a fight going on here. And we know below the 15-minute, close towards that 5-minute, that 15-minute secondary demand here. Not something we want to try and rush into. Oh fuck, I can't touch December. I'm going to rinse the fucking book. Holy shit. Yeah, thank God I looked at the order book. I would have absolutely eaten that alive. So we've got the divergence. But we don't have any strength that we're showing from it yet. Okay, we will continue the div in this region. Still not undone it yet. You can see here, still not undone the div. And let's bring up the Renko as well, because we can take a look at that. So we see the 1-minute strong drive on Renko all the way up here, and we can see that the target area for Renko is like the $4 region, $5 region here. So we can see that's the driving point for Cuban's bands. That's our reversion point, is over here. Low fives, mid fives. Does that line up with anywhere? Yeah, 15-minute demand. So like this looks like it's the primary push point, the primary push target that we may see Uni try and get down towards. If this div remains, then again we'll look at positioning around this. We may look at exiting our short position if the 1 minute survives the divergence. But ideally, I'd like to continue that a little bit further. Again, thought process behind that is we have a really good entry, right? We're all the way up here now at 738, so we're in no major panic for it. We've got the 5 minute that represents continuation to the downside. We've got the 15 minute that represents major continuation to the downside. We've got a 15-minute demand region down here, right, which is another 10% below price. And so we've got that opportunity. Looks as though the divergence is going to lock. Again, no rush. Even though we're on the 1 minute, there's no panic to try and move into position overly soon here. What I don't want to do is compromise or throw back profit to the market. So if I go and enter along here and we nuke down another 10%, right, that kills 10% profit on my short, which is by far the stronger position right now. Okay, so we're starting to condense. We can see this in the candles. So in the structure of these, we're starting to condense lots of back and forth, right? 1 minute green, 1 minute red, 1 minute green, 1 minute red. So we're starting to condense here. There's back and forth going on. Divergence is still clean. Awkward spot for it because of this zone below us. What we'd rather see is that strong smack down now. Strong smack down into this bottom region. If we're thinking about trailing stops and what that could look like for us as a scalping thought process here, we could even bring them down up to 653. Because this structure should not be compromised. The only thing we've got to keep in consideration with that is what if there is a 1 minute divergence playout? What if the 1 minute divergence playout comes and takes these highs and then returns? Okay, so we just need to keep that in mind as well here. So I think this is probably the best it's going to get in terms of divergence play to try and hedge. Not that I've pulled the trigger on it yet. A lot of back and forth still in this. I'm going to take half hedge size. So I'm going to take half hedge size here. I'm not going to take full, just because it is still back and forth, and we could have an extension of the divergence down here. So we could have an extension of this divergence, especially with the price action that we've seen up until this point. Right, it gives enough room for the RSI to bend down again. Right, like this. So I'm just going to take half. That means that now I'm just losing half of the profit on the short side. And I'm also potentially establishing a position around this 1 minute divergence if we do get a strong play out, or if this turns out to be the bottom of this particular move down. Another way to do this, if you were looking at scalping this yourself, is taking 50% profit on your position. So not moving fully out of your short position, but deciding to take 50% profit at an area like this. And this is actually, for me, that's actually a really good suggestion for myself. So I'm going to take a tiny bit of profit on this. We're just going to take the edge off the position down here. And so we've slightly scuffed our hedge, right? Because it's now a larger percentage of our overall short position, but we have realized some of the profits for that short position, which I think in an area like this is a good opportunity to do so. We're still ahead on the short side, So the movement to the downside still favors us. The hedge position isn't going to be something I'm going to get stuck with. So we've got a couple of options in here with the hedge option. Is number one is you can close your hedge as soon as we take the low. The other option is you can keep your hedge open in the hope that we make a triple divergence down here. Now, my personal preference on an asset like this is not to hold. So I'll look at cutting if we get below these lows. I will just get out of the position because I'm not going to start trying to hold an awkward hedge position against the sell-off. And I'm not going to try and hold a hedge position on, what could potentially, like we were saying before, go down 10%. We're looking for some sort of reaction, though, to the upside from this. And, this area here is still really the point that we get into trouble with our shorts right now. That's really the area over here. Okay, so that's better, right? That's the pop that we want. So that's good from the hedge position. There's no divergence on the 5 minute. Looks like there might be, but I don't think there's a clear divergence in there. We've moved back to a region that's provided support previously, so once again it makes sense to bounce from an area like this. So now we're just going to dive down to the 1 minute once again and take a look at reaction points around this. So we've got a bit of profit locked in for Uni on the long side here. And we'll talk about it if the situation develops on like how we can transition the hedge play to be the primary play and what conditions we'll be looking for. Realistically what we're looking for is a taking, right? A taking of the high, a flip of the market structure that we're currently seeing in effect, and then a drive to the upside. That's primarily what we're looking for if we want to try and turn that into a main position. But from here, right, getting up towards that 50 level, getting back towards 50, and potentially struggling a little bit more around this region. So that's mono. So we know that 56 has been a trouble point. So anything above 50 on the 1 minute since 8 o'clock, since here, has been an issue. That can also give us a clue about the market. When we take a look here, notice how this 50 level, right, up to 54, was the support region all the way through here. Where did the trouble start? Right, on the breakdown. So now we've got this region that's doing the same on the resistance side. So if we break through that and we break through this, then where does the trouble start? Here. Okay, so we've got those reference points that we can utilize from RSI in terms of understanding, where the direction of this trade is heading. So up against 654 is where I don't want to see this above from the short side, and it's where the change may come from the long perspective and the main position. So we're talking a lot about the 1 minute chart. Remember, we've also got the 5 minute and the 15 minutes to take in mind. We're sat in the middle now of the underside of a demand region, which has the potential to turn into a region of resistance. And we've got a 5 minute that's very close to being oversold, but hasn't quite hit it yet. So the spot that we're at here favors closing. Right, favors closing the long. So I'm going to go ahead and do that here. And we'll explain a little bit more about that, about why that decision has been made. So I favor closing the long because the RSI rejection point is in that 50s once again. So I have to always go in line with what I know is fact, right? Not what I hope happens or think may happen. So I know that historically for this I say historically, right? I'm talking like an hour and 20 minutes. This has been a point of difficulty for Uni to overcome on the 1 minute time frame in this sell-off. So for me, this is an opportunity to close the trade out, lock in that profit. So we take about $190 from that position. What have we got? So this is the trade that we took, right? This is the hedge position. So we got a small profit on this. We got the 14 cents move captured on the futures contract. And also what we're looking for now is obviously we're looking to see like what's the play from here. Because is it going to be that upside play? In which case, sure, we can enter another long position once we change this structure around. But otherwise, this rejection point here is still of concern for us for a continuation down towards this $5 region. And we'll look at positioning around the $5 region for sure. So relatively interesting point. You know, I don't want to hold on to a long position too long. I can only go based on the data that I've currently got in front of me, which is very limited. Right? If we push higher, then sure, it was a breakthrough point that we've got, and we can choose to make a new play on the back of that. But we certainly can't hold a position with the expectation it does something versus something that we can see, you know, throughout these regions has reacted in a very similar way every single time. So we certainly don't hold on to a position in the hope that, you know, this time is different. It may be, but that's not the way we can approach the trade, because you would have been burnt here, 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 right? It just may happen to be that the one time I'm on video, I may get burnt here. So if you can hear me typing, it's me putting together my potential order for another close of the short position. So taking off some more if we start to get above here, because again, we've got this 1 minute RSI that's now attacking. Right, and I want to try and lock in profit before we get to this high over here at 653. So I want to try and get squeeze a little bit more profit out of the market, while there may be an opportunity to do that down here on the low. So we know we had the 1 minute div. We know we're still in the process of playing that out. We know that the 5 minute has the ability now to curve back around. There's some potential support and resistance around 650. But again, we don't want to try and hang on too long in that region. So we're going to take another little piece of the profit here. And we're going to wait to see what the reaction is around this high here, and also the reaction back at 635, because that is an area here that we may have some supply created if we do get a decent run up this side. So we're just going to take a little bit off the table, protect that position, and squeeze a little bit more profit out before we potentially get here. And again, reason for that is 1 minute indication of strength by this break of the RSI, something that hasn't happened in the entire time here, and we know exactly what happened when we got this breakdown over at this point here. Okay, with the reverse being true. So that example I gave before, we're seeing the opposite side of that happening now. And so that's why we need to be aware and try and squeeze the most profit as possible from the market. See, definitely buy pressure. A lot you can see as well, you notice the change in reaction to the candles. So right now, during this run, the last 3 minutes, we've seen a far greater sort of volatility to each of the candles. We can see far quicker movement of the candles. So once again, we know there's action happening around these candles, both sides of the market. this is the supply region. So we know from the first reaction there was definitely supply in here. The second reaction, we're assuming there's still some supply left, but we'll see whether or not this is enough supply to be able to drive price lower, or whether or not this is going to be a case where buyers just overrun. Obviously underneath, potentially, getting the run back down to 635 here. Potentially the buyer's stepping in already. But again, wild swings in these 1 minute candles now. So it's definitely an increase in interest here on both sides. I've got the 1 minute FTX chart up as well. The 1 minute is actually slightly higher in terms of where the high is for this. So we're actually on FTX. The high close is at 650 here. So this obviously is the Binance chart, but the high close is up here at 650, and this current rally here has only achieved 646. So unlike this, like if I swap this to line and say higher high, right, which could be true, but we do have a difference in what both are representing here. So Binance says higher high on the 1 minute. FTX says still a lower high. Right, so FTX is what I'll go with because it's the exchange that I'm trading on at the moment. But FTX is still representing this rally as a failure, as a lower high, and therefore obviously we're still considering the opportunity for more downside here. So getting into the 635, this would be an area that we would definitely consider as a demand point. I was actually marking that on FTX and then using my tools on TradingView in the browser. So every indication so far that buyers are happy buying there. Got the bounce on the 50 here, right, from the upside. So definitely an indication that buyers may be happy buying in this region. So what we could do now is if we were looking to play aggressively into this, we could take a long position from here. Right, we could take a long position on the back of this low being formed here and demand being present in this region. We either have a stop here at 623 or we just run a stop really tightly at 634. But we're going to use this as another opportunity to remove some of that exposure to the market again here. So getting into the supply, but starting to show more strength. So starting to show more strength through this region. As we can see, a bit more power now being put on by Uni. And this is quite clearly now a high on FTX, obviously, as well as the Binance side of things here. So I'm immediately going to hop. I'm immediately going to hop into a long position here. So I'll take what I would class as a third of the position that I'd be looking to take here. But I'm immediately going to hop long into this. Reason being, good strength shown here. 5 minutes starting to round off and head back up to the upside. Now I'm aware that up in this region now, right, from 665, there's going to be some issues. Right, there could be some issues getting into this region at 665. But even so, we're going to be making money on the move up here, similar to the way that we took the hedge play. Okay, so definitely opportunity around this, but I'm going to play into this as the formation of a higher high, a break of the structure, and aggressively position into it on the long side. But I'm just going to take a third on the position size, and then what I'll do is I'll look at trying to move into position slightly further out. So we know that this is busted now, right? There's no more supply left here because we're inside the zone. So we can delete that. We can also delete this level here, and we'll delete the level down the bottom. We'll keep the divergence on as a reference point, and we know that this is still a 15-minute demand region. So I'm going to leave that up. What I'm also going to draw now is a level over here, okay, because this is potentially another pocket of demand. We've got the rally, right, a small little base inside here, of pop of consolidation, and then the continuation from this that is breaking the structure. So we're looking for, is there a tap back down here? Okay, and this would be my entry. Is there a tap back to my entry? And if we get that, can it hold? Right? Can it hold? Now, in terms of stop, for now, I'm going to try and keep my stop tight below here. So again, I'll mark it if I need to, but I don't really want to see Uni going below here. I'm happy to add to position here, but then I have to get out here. If we choose to go all the way back down to this low down here, then that's fine. I just have to reposition. Right? If we bounce away from it, I have to reposition. But I'm not going to start trying to hold on to a position from here in the hopes it bounces here, because once again, I know this level at the $5 is below us. So we did pretty well. I think we got out. We took really nice profit levels in terms of our short position. So we were worried about this high going, and we started to scale out as we saw the strength coming back on the upside. So I think, you know, really, really pleased with the way that I scaled out of the short position and maximized the profits in assessing a situation that was starting to run against me, if I do say so myself. So I'm trying to position roughly into anywhere between like 1,000 and 2,000 Uni contracts is kind of where my positioning is. So that's kind of what I'm looking at. 15-minute as well. We're starting to get a good bounce. We can see here as well from this rally here. It's supported down at 45. We've got some of that here. You know, we're starting to see some of this stronger price action, protection of the lows. We spoke about protection of the lows. Could be in effect. Okay, and now starting to try and rally this price. Looks okay so far in terms of, you know, the potential for this region here being a little pocket of supply at 662. We seem to be moving through that relatively comfortably for now, which is obviously great from my long position. Let's map out the long position while we're here. I have no idea how long this video is going to turn out to be. I really didn't imagine that I'd be here for a long time, but it seems as though I'm now here for a relatively long time. So what have we got that we could look for as potential points for being nervous about the position? Well, we know that this area is still, you know, a little bit tricky, and we know that 1 minute RSI, you know, is now getting towards this region of being overbought again. Like let's be aggressive with this, and let's start aiming back towards the $7 levels. Let's go number 1 for 7. Let's start aiming towards the $7 levels that we'll try and push this into. And like, look at the fucking movement on this. You know, we're talking about a 10% markup in price in the space of like 5 minutes. So, you know, we're talking really aggressive here. I know that ETH is obviously pushing as well a little bit here into the evening as the traditional markets come to a close. I just better take a quick look at that just while we're comfortable in our long position on Uni. Yeah, so ETH is moving back up. ETH's now at an interesting point as well, where, you know, this again is a region of potential supply for ETH over here, starting to get rid of that extension point here, and there's the potential, I think, as well for a diagonal down here on ETH. This is pretty clean as a diagonal, so we get confluence with this level again, the important higher time frame one here, and potential confluence around that. So ETH is at an interesting point. I don't know why the fuck I'm saying that out loud, because like by the time you guys see this, that's not going to matter at all. That's Sushi, and Sushi's also looking pretty good here. If this is a reclaim of this level, then Sushi looks great. If that's a reclaim, hourly needs to do it. so far it just looks like a resistance run. So let's get back to Uni. Sushi's dead to us now. So again, if we're looking at aggressively taking profit, this is a point we could take profit. Why would we take profit here? Because we've reached the overbought region. And if we're looking at getting in and out of trades quickly, then this would be a signal for us. And it doesn't matter about prior reactions, because all that would matter in this situation is we're looking at banking the profit that we've made from this move already. But for now, for us, we're holding tight. What we'd be looking for is a cool off and a touch potentially of our entry point down here at 647, and this would be an opportunity for me to add to the position. And again, keeping that stop around here for now. So I don't want to add here. Important thing to note. Okay, I don't want to add here. The reason I don't want to add here is I don't want to compromise my average entry. I don't want to bring my average entry up to, here, and it makes it awkward for me. I'm happy with the position. If I only get a third of a run, then this is moving so volatile that I can I'm still going to be in good profit from any move that takes us up. So, but I don't want to get overexcited about positions here. And as well, a point to mention, we are often, and I speak about this in the way that I was guided visually by candles. So when we're on the 1 minute time frame and we suddenly see like this green candle that's like ripping back up the side of this red one, we can often get nervous and start thinking, okay, get into position, add more, this is going to bounce. And you've got time, you've got a lot of time. So don't feel as though ever you have to rush into position or rush to add just because visually you see what you perceive to be a strong candle. Because look what's happened on the next one. We're just coming straight back down again. So if I went and compromised my entry, I'd be like, oh shit. Now this isn't looking as attractive for me. Now we're starting to see sell-off again here. So it's all about being comfortable in your position, adding at opportune moments, and not just sort of, randomly looking at candles and thinking, that's a good one, add there, right? Or feeling that fear and thinking, shit, I need to add now, otherwise I'll miss everything. Plenty of opportunity, plenty of time. I'm going to keep one eye on Sushi as well, because I really do like the look of this here. And I think this runs $2. This is a tap into supply here, but I think this runs $2. So I would like to keep an eye on this to see if we do get that as a run. So you're going to see me flick back and forth between them. I would run them side by side, but it's probably easier for viewing to keep it as full screen like this. Good hold up. That's what we want to see, but we're not interested in touching it with an RSI like this. Because if we get a move higher from here, we have the potential for a bearish divergence. So we're not interested, again, number one, in adding to a position at a region like this, where we've got this this potential. And obviously, we're still long, so we don't care. Like, as long as price is going up, that's good for us. Man, I wanted to play WoW as well. Like, what am I doing? Why am I recording this? Yeah, nice and strong. This is good again. From our long position, we don't care. We're only in a third, but this is a third of an asset that's moving 10% chunks, so there is no worries at all. So we're approaching the $7 region, which we know, this was a rejection point for this on the way down. Once again, that volatility in the candles relatively increased at regions like this. One minute divergence potential over here. Let's take a look at the structure on the 5 minute. Okay, so this is an interesting picture that it paints up here. So we're struggling now at this region. We're getting back up to the 50 level on the 5 minute, which again, we can see the confluence around here. So this is definitely an interesting point. We may close the long here and play the short side. Again, we'll just wait to see what happens with these candles. We're not in a rush to get in, because if we do get into the short side from here, then we're looking for the target that's obviously going to take us down to the lows. So we're just gonna wait around here. But the thought process right now is to close the long, automatically flip short on the creation of any sort of high that I have a basis for a stop on over here. But for now, just holding on in position, waiting for the divergence to lock in. When we've got a divergence like this can easily still tick back up and create a high. And so we don't want to get out of our long too early, and we certainly don't want to position short too early. ETH gone back to a little bit of a sell-off. So I'm only aware of that because my P&L is fluctuating. How long has this video been? An hour? Oh shit, and I've had this blue border the whole time. Oh Jesus. How unprofessional. Okay, so getting back towards 7. Still diverging here. But strength is in the up. So we would think more about this as potentially being invalidated. But we're certainly moving into a region now that does have a history of being a sell pressure region. This could be a moment to take the hedge play. So when we look at the 5 minute chart through this region, then we've definitely got some selling action that occurs up here. We do have what could be a triple divergence locking in here on the 1 minute. And from FTX's perspective, this 695 level is the high for the 5. Right, so being stopped before there would be important. Okay, so we're gonna go ahead and You're not buffering, don't worry. My brain was buffering in making a decision. So we're going to go ahead and close out this long. I'm going to automatically flip short on this. So this is a great trade for us. This bagged 6%, right, in the time that we've been on here. So this was a great trade for us. I'm going to go ahead and take the short position on this. Entries down here. And we're going to have a relatively flexible stop along the top. All right, I'm going to write it back down to this supply down here, this demand, sorry. If we start escaping out of the top, or if we undo the divergence, then I'm running. But I'm just going to kind of sit in this for a moment. We're like 3-0 up now in successful trades. We did our hedge, that was a success. We've done our long, which is a success, and we've done our short, which is a success. So I can give money back to the market. Obviously, I don't want to, but it is possible for me to give money back to the market without feeling too beat up about it. I'm taking an aggressive opportunity here in the triple divergence, and I'm hoping that it holds. But there's still work to be done here in terms of getting that to be a holding point. So this is relatively flexible, so we'll set it a little higher for now just to represent that. If we get another high up here on the div, then I may choose this to be an adding spot versus a spot that I'd look at closing in. I like the 5-minute picture up at this high, but we'll just see how the price responds now when it creeps above or towards that $7 level, which it looks like right now we're going to get. If we rip higher, then I'll get out of position and we'll close out the video there, because that will give me an opportunity to take a break and not continually flip positions on this. So another thing that we don't want if we're looking at divergence-based plays is we don't want any hold up. So what we want is we want relatively quick action. We saw that small consolidation down here and how things were tightening up, and then we saw the expansion away from it, which is fine. But what we want is a relatively quick play out. So if price starts chopping around here and just inching its way down, and this starts returning back to 50, then I'll get nervous about the position. First point we're looking for is to get back down to here. Second place we're looking for is to get down to here, and then third place would be the 560. So not forgetting those kind of the higher time frame, 15-minute targets that we've got, and areas of interest for us. 1 minute's certainly giving an indication of slowdown in this region. 5 minute was certainly giving an indication of slowdown. So we're just going to try and hold through this, try and get a sharp reaction. We could also potentially choose to take some profit somewhere near this low, down here at 662. That would also be a thought process, since taking some profit off down here. I mean, that candle flicking green from this position like 4 times there does not bode well. But let's see. So we're getting some of the price action I don't really want to see, which is that hold up. But we've still got time. There's no real panic in this spot. That's better. Fuck your green candles. Fuck your buy up. So that's a good push back down towards the 50. We'll see the reaction there because, like we know, okay, it holds the 50 from the upside perspective. So we are interested in seeing if it manages to hold this 50. My entry should be used as resistance, not because it's my entry, but because there's a potential for supply here, and we saw the selling strength come in this candle. So I'd be looking for, you know, whatever went on here, there's some protection to be offered to that. So 684-ish we'd hope would hold as resistance. But in this spot, we know that this 50 level can bounce on the 1 minute. It would also be a hold on 5 technically if it managed to keep it here. Yeah, so there's a strength in the 1 minute. Fuck you red candles. This would also be an important notation point as well in terms of scalping this, because the notation point here would be the divergence. So I'll throw that out as a virtual question to whoever is watching this. So why would the divergence here be a reference point for me in future for if I continue to scalp Uni? And certainly for the short term, if I continue to scalp Uni tonight, like why would this divergence and this, if it recovered, be a strong point to note down? I'll give you like 10 seconds to think about it. Okay, that was probably long enough. So the reason the divergence would be a notation point for us and something to keep in mind is that it potentially indicates a change of strength. So we spoke about the RSI crossing and that may be important to us. You know, when we looked at the downside break and we looked at the upside break here, we knew that would be an important point. And we know now that if the divergence doesn't play out, if we didn't get a strong sell-off from this, then price is too strong. So once again, it shifts our focus to make sure that longs are the focus, because the divergences are ineffective. Price is potentially holding the 50, and we'd be looking at continuation to the upside versus downside. So important point that whenever we're scalping, we note the strength of the divergences to understand what the market conditions are saying to us. And if a divergence cannot play out, it struggles to play out, or it's weak in its play out, like if this rallies and stops me out now, then I can't look at divergences, right? I just consider this as a strong 1 minute now play that I can get back into the upside. So we're going to bring the stop now. You know, this shouldn't certainly be going above here now, so we can tighten that stop up. We're still hovering around this 50 level, so this has absolutely every chance still of rallying from here, but we're gonna hold in position still, obviously, from where we are. I've got the Binance Futures chart up from this. The Binance Futures chart started this morning at 8 o'clock, and it's got a very clear resistance point at 555, which was untested. So that's a pretty good point to pitch for, especially from where we are right now. Plenty of bouncing around this, but we're still okay in position here. I'm more concerned about ETH. I've gone through positions so many times. That video is also up on why I took the position on ETH, why I took the short side again on ETH, why I've been short, long, and short again. And if you're watching this video at any point in the future that isn't today, which is the 18th of September, I hope that I was correct and enjoy the confusion over this part. So the short's in nice profit. I'm going to slide my stop down again to here, and just to get it a little bit tighter. It's an awkward one to slide the stop down on because I don't really have a huge amount of reference points. I've got this high here where we've got another small leg down. But really, like, I don't want to leave my stop up this high right now in market conditions. I'd rather try and squeeze it down. Because we've got the sell-off and we've got this RSI moving down below the 50, you know, my hope is, I try not to say expectation, but my hope is that we do continue to the downside. So I just want to try and protect that here. If we're thinking about the low protection, we may get that at this point here, where we can see some of these wicks coming in. Certainly a good rally off this. 5 minute is relatively attractive. We would certainly be hoping for a third red 5 minute candle, because that's going to keep this RSI pressure to the downside, which is obviously what I'd want to see here. ETH selling off a little bit more down to 379, but Uni not really giving a shit about what's going on elsewhere. Okay, so out of the position, no issues with that, no issues with the trade. Let's see what would have happened if I would have kept the stop slightly higher on this. Let's see how much my want to move the stop is going to have affected me. Again, rapid action picking up all of a sudden. Speed of candles massively increased. Please give me justified stop out. Certainly aggression on both sides, as you can see there. Certainly aggression on both sides. So there's a support level on, I'm just looking at, as I said, it's a different picture, slightly on Binance futures here. Not massively, but it just gives me a different perspective looking at this chart. So we've got a support level at 610. And then we've got the region, which is at 550, which is the region that hasn't been tested as a breakout point. So would be the primary focus for slightly longer term positions, probably from that point. Right now, this isn't looking like a good stop out. We're certainly not seeing the continuation past my stop, which would make me feel better about getting stopped out, but it's certainly the point that I will end the video. Finish with a yawn. So thank you very much if you spent the time watching this. We were 3 for 1, 3 wins, 1 loss. Not a bad record when we're taking sort of a minimum of 6 to 20% on moves at a time. So hope this was insightful. Hope it was kind of a dive into my thought process, and hope you can pick up some things if you do choose to scalp an asset like this at times during high volatility. Like I said, just be very, very careful with it. A couple of wrong mistakes and you will get punished bigly for it. So just be careful in the way that you're looking to trade it. But if you are taking it on, then best of luck to you. And enjoy the weekend.